Hey, welcome back everyone. My name is Kenny Robinson, and in this video, I'd like to discuss the cash cow investments known as REITs, or Real Estate Investment Trust. Now, you may have heard of these before, you might even own one, but simply put, all a REIT is a company that derives a majority of its income from owning real estate and distributes 90% of its taxable income out to shareholders, you and me. So with that being said, when most people think about REITs, they think of office buildings or single family homes or even apartment complexes, but really anything that has to do with real estate can be packaged up into a REIT. Now there's both public and private traded REITs, but in this video I'm going to purely be discussing publicly traded REITs and a few that you may have never heard of before. So without further ado, let's begin. So if you stick around towards the end of this video, I'm actually going to show you a great resource to research all the different types of REITs that are available for everyday retail investors. I'll mention that towards the end of the video. REIT number one that I'd like to mention in this video is Iron Mountain Incorporated. Now, what's funny is their name is essentially what they are. They've carved out large areas, large storage areas in old mountainsides, similar to old nuclear facilities, and they've actually utilized some of those. But it literally inside a mountain, they have storage units upon storage units where they store sensitive documents, they store artifacts, they store pieces of art. In fact, 95% of the Fortune 100 companies in America use Iron Mountain to store their sensitive information. Very, very interesting REIT. Again, nothing to do with apartment buildings, office buildings, single family homes. But again, it is real estate, so they pay 1, 4, 7, and 10. Moving on, I'd like to mention Lamar Outdoor Advertising. Now, you've probably seen their billboards. They have the sign at the very bottom of the billboard that says Lamar. It's a green and white sign, and they own the real estate that those billboard towers sit on. Now, that's very unique. Again, not something that the everyday real estate investor would consider, but it's a very interesting REIT. They actually weren't a REIT up until about 2013, 2014, if I'm not mistaken. They actually pay 3, 6, 9, and 12. So there you go, between IRM and Lamar Advertising, you've staggered your dividends. So you're getting paid almost every month. Very interesting company. Next time you see a billboard, I bet you'll think of Lamar. The next one I've mentioned on my channel before, it's LTC Properties. Now what's interesting about LTC is it stands for long-term care. So 7 out of 10 of us, statistically speaking, are going to need some form of long-term care in our golden years. But essentially what this REIT does is it owns the land and the buildings that these facilities operate in. So it's actually going to be a very defensive investment moving forward as the baby boomers age, after a few decades from now, age into those golden years where they may need some of those services. It's an excellent monthly dividend payer for my portfolio. And there you go, just with those 3 REITs already, you're now receiving 100% passive income from real estate without lifting a finger. The next REIT I'd like to introduce is Essex Property Trust. Now, Essex is an interesting one. It's actually almost a dividend aristocrat, meaning it has raised its payout for a consecutive 25 years or more. Now, what's interesting about this company is they actually owned higher-end townhomes and apartment complexes in very price-inflated areas like Silicon Valley, San Francisco, where these tech workers, these people that make 6 figures, they can't afford to buy a home. Because if these techies want to buy homes in the area where they work, or at least within a reasonable, commutable time, they have to pay multi-million-dollar price tags for these homes. Now, in the tech industry, many individuals are hopping from company to company, or maybe they get transferred over here or transferred to Texas. So what happens is they really don't want to plant their feet and buy a multi-million-dollar home when they might be moving in a very short period of time. So what they do is they actually rent these apartments from companies like Essex, and Essex has been excellent as far as cash flow. The next REIT I'm about to mention is arguably one of my favorite REITs. Again, I try not to drink the Kool-Aid on any investment that I own, but I love Realty Income. They've literally trademarked the name, the monthly dividend company. Now, what's interesting about Realty Income is they've raised their dividend for a minimum of 25 years consecutively or more, right? I believe they're actually on their 26th year, might be 25th, possibly 26th. But I love this company because it is so boring, so boring. Every year the CEO is actually interviewed at REIT Week in Las Vegas, and he says the same thing, right? We're under leveraged, we have plenty of cash on the books. We looked at $25 billion in deals this year. We bought about $1.9 billion. We're very conservative with our money, blah, 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 blah. It's a snooze fest. But that's what I love about it is they're not trying to reinvent the wheel. They're not trying to do any slick sort of financing or using leverage. They simply just pay. And in 2008, not only did they raise their dividend to us shareholders, they actually had the lowest occupancy level they had was about 96%. So they're very, very conservative in who they rent to, and they focus on triple net lease, which means the leasee pays the property tax, the maintenance, and insurance. So Realty Income simply owns the building, and the tenant pays all that other stuff. Triple net lease. I love Realty Income. I'll probably own that and take it to the grave with me. So the next one is an unsexy REIT, but again, that's why I like these things, because they're boring, unsexy, they're not flashy. Sun Communities. Have you ever heard of a manufactured home park or trailer court, right, for slang? Well, these types of housing are always in demand, right? Whether we have another 2008 or whether the economy is booming, there's always a percentage of the population that will need this type of affordable housing. So again, what this company does is they don't own the actual houses themselves. They may own a few, but primarily they own the land that the mobile homes are zoned for. The reason this is actually very valuable land is because municipalities aren't zoning new land for mobile homes because they're considered an eyesore to most municipalities. So the land out there that has already been zoned, or the existing mobile home parks, are actually cash cows, because again, there's always a certain population of people that need that type of housing. So Sun Communities, ticker SUI, they actually pay 3, 6, 9, and 12. Another very defensive type of REIT is storage, right? Storage units. We all have had one in our life, or we probably will at some point. And it's kind of like a gym membership. Once you move your stuff in there, right, every month they take that out of your account, and you really don't notice until maybe they jack the prices up, or until you finally get around to spending a weekend to actually moving it or selling the stuff, right? So if you've ever seen Storage Wars, it's a very simple process. These are basically 3 walls, a roll-up door, and a light bulb, right? There's no plumbing, there's nothing to fix, right? So they, when a tenant leaves, they just simply sweep it out. They might change the light bulb, and that's it, right? There's no complicated eviction process, and it's very, very defensive, recession resistant, because sometimes, like 2008, when people had to sell and downsize, they actually utilized storage quite a bit. And as Americans, we all love stuff, right? Our garages are packed with it, so a lot of us do have storage. So Public Storage pays 3, 6, 9, and 12. Now, Gladstone Land Corporation, we've been talking about storage, we've been talking about mobile homes, we've been talking about high-end housing in tech-heavy parts of the world, we've been talking about billboards, but what about farmland, right? We all need to eat food as the population grows and urban sprawl occurs. Farmland is actually very, very valuable, especially farmland that has water plumbed to it on site. So LAND is the ticker. Gladstone Land Corporation pays monthly. It's been a killer investment for me, and I love it long term. It's definitely a long-term play, and it's very defensive because, of course, we all need food to eat, and they grow a lot of the food that we all eat. In fact, if any of you have seen The Big Short, in fact, I did a whole video on this REIT. It was actually one of my first videos. I'll link it in the description below. But if any of you have seen The Big Short, right, Dr. Michael Burry, he was interviewed in real life, away from the movie, and he actually said,
but he's happy doing what he's doing right now, including buying farmland. Let's hear what he had to say.
I believe that agricultural land, productive agricultural land with water on site, will be very valuable in the future, and I've put a good amount of money into that. So I'm investing in alternative investments as well as stocks.
Now finally, I love to talk about ETFs, or exchange traded funds. These are essentially baskets of different publicly traded products where an investor could simply buy that one ETF and gain exposure to an entire sector or index, or anything of that sort. Now there's several REIT ETFs out there. VNQ is one of them, by Vanguard, again, where you simply buy that one ticker and your money gets spread out among many different REITs. Or there's iShares. REET is another one. It's the Global REIT Index. And so being a real estate investor is essentially as easy as a few clicks on your computer. Anyone with an internet connection and a brokerage account can become a real estate investor. The reason why I like REITs, and again, I am an active real estate investor, just in person with tangible assets, but The reason I like REITs is they're 100% passive. They may not pay as much as my physical rental properties do, or if I flip a home, but they're 100% passive. So what I'm focusing on in 2019 this year is to actually do a lot more active real estate, take some of those profits and buy passive real estate, i.e. REITs, right? And enjoy that passive income for the rest of my life. So with that being said, I hope this opened your eyes a little bit to some unique REITs out there that you may or may not have heard of. Again, there's links in the description that show many different things that I've referenced in this video. Now, I wanted to show you, I'll put it on screen here. This is the website that I go to discover all sorts of different types of REITs based on sector, right? Based on market cap sometimes. And it will give you all the information that you would ever want to know about REITs. And so that's just a little tidbit. Again, I'll link this in the description below, but here's a screenshot of that site. So with that being said, thank you so much. Let me know in the comment section below if you own any of these REITs or what you think about it. If you like this video, give me a thumbs up. It lets me know to continue to upload. It also lets YouTube know that I'm uploading quality content. So with that being said, I'll see everyone next video.